Listen, every single week someone's telling me how they are never paying off their student loans. And I get it. I really get it. However, if you plan to purchase a home, there's some information that you need to know in order to set yourself up to be in the best position possible to purchase. Hey everyone, welcome back to my channel. I'm Shakelia LeBlanc, aka the Loan Slayer, and I'm your guide to navigating the exciting and sometimes challenging world of home ownership. Today, I'm discussing how lenders calculate your student loan payment, specifically for an FHA loan program, and how that can affect your purchasing power. So grab a pen and a notepad and get ready to say hello to your new home. Okay, so let's jump right into the FHA guidelines, which I'll have on the screen. Required documentation. If the payment used for the monthly obligation is less than the monthly payment reported on the borrower's credit report, the mortgagee must obtain written documentation of the actual monthly payment, the payment status, and evidence of the outstanding balance in terms of the creditor or student loan servicer. The mortgagee may exclude the payment from the borrower's monthly debt calculation where written documentation from the student loan program, creditor, or student loan servicer indicates that the loan balance has been forgiven, canceled, discharged, or otherwise paid in full. So basically what these first two paragraphs are saying is, one, if you don't want to use what's on the credit report, you have to provide some clear documentation. If your credit report has a $300 payment on there and you're saying, no, but my payment is only $20, you got to have something to back that up. And the second portion is saying it can be excluded if you have proof that the debt has been canceled. So, it takes a little bit longer. It takes, some time for debts to be reported back to your credit report. So let's just say in the time of you applying for a mortgage and when you go under contract, your student loan has been canceled and you don't want to use that payment that's on the credit report, you can provide documentation to the lender showing that it has been canceled. And what they'll do is verify that, usually have a supplement ordered through the credit bureaus to show that it's actually been canceled, instead of having to wait 30 to 45 days or maybe even longer for the student loan statuses to be updated. So next, calculation of monthly obligation. For outstanding student loans, regardless of the payment status, the mortgagee must use, number one, the payment amount reported on the credit report or the actual documented payment when the payment amount is above zero, or 0.5% of the outstanding loan balance when the monthly payment reported on the borrower's credit report is zero. So this is giving us two options, right? This is basically saying no matter what your status is, whether you're in active repayment, forbearance, deferment, it doesn't matter the status of your loan. These are our two options for calculating. If you have a payment on your credit report that is above zero, we can use that amount on the credit report. Or, if it's lower than what's on the credit report, remember you have to use documentation, your IDR, IBR, they're called different things, to support using a lower amount. Now, if the amount on your credit report is zero, then we're going to have to use 0.5% of whatever that balance is. If you're saying, if 0.5% of that balance is really, really high, then we want to probably get you on a income-driven repayment plan that's a lower amount, more than zero, but a lower amount than 0.5%. And let's jump into some examples. Example 1, client A has student loans totaling $50,000 and a $70 month payment. She is currently in deferment and not making any payments. What will the lender use? So In this example, the client is in deferment, not making any payments. I get clients like this all the time. Hey, yes, I have a income-driven payment plan, or yes, there's something reporting on my credit report, but I'm not making any of those payments. I'm in school right now, or I'm not making those payments. It's deferred until next year. Well, like the guideline said, no matter what your status is, we have to use a payment. Good thing we don't have to use 0.5% because you actually have a payment plan set up for $70, or it's reporting $70. So we can use that $70 amount. So that's the amount that we will use. Let's go to client B. Client B has student loans totaling $50K and an IDR of $20. But only $0 is reported on the credit report. What payment will the lender use? So, in this case, it depends on the lender. If it's 0 on the credit report, their first thought is going to be to calculate a payment for you of 0.5% of $50K. In order to avoid that higher amount, since there is IDR, it's just not reported on the credit report, and that happens a lot of times. This is not uncommon. You want to give that IDR to your loan officer, that lender, and make sure they use that payment instead. So since there is an IDR, what we can do is just have the supplement ordered through the credit report bureaus and have that $20 now reflected on the credit report, and boom, we can go ahead and use it. You want to be on top of this. So if for some reason your DTI is a little bit higher when the lender is calculating your payments, make sure you go through the debt with them and see, hey, what debt do you see on my credit reports? Because again, if they just pulled up your credit report and they haven't asked you any, additional questions like, hey, do you have a student loan payment plan? They're going to just go ahead and use their own calculations. You want to make sure that you share your IDR. And if you're not on the IDR, what I am sharing with you is it is usually in your best interest to set up a payment plan for more than $0, because our calculations are going to be higher than usually what your income-driven payment plan is. So set up a payment plan. It doesn't matter if you're not making payments on it for an FHA loan. You can use it regardless of the status. Did you find this video helpful? I really hope so. I will be doing a part 2 and a part 3 discussing other loan programs and how lenders calculate student loans for those specific programs. Please leave me a comment, ask me questions below, and I'll make a video or answer your questions in the comment section. Don't forget to like and subscribe and share with a friend. If you want a consultation, my link is below as well.